In this video, I'm going to cover 3 things. 1. Discussing when to buy and sell a stock for investment. 2. My thoughts on diversification. And finally 3. That time has come, I will close out the course. The price of a stock is driven by its earnings, which are reported on a quarterly basis. The following chart shows G3, with dotted lines showing when it reported its earnings. Now if you look a bit closer, you'll see that the stock price is constantly engaged in the dance of anticipating earnings and then responding to the actual results. Point A shows the price rising dramatically anticipating earnings, and then a small fall off, but mostly the rise was maintained. Point B shows a further rise anticipating earnings, and then a fall off after the earnings were reported. Basically, the anticipation was too early for actual earnings to catch up to the expectation. Point C once again shows the market anticipating good earnings, and this time the market responded favorably after they were reported. Point D shows the maintenance of the status quo, where there wasn't much anticipation in the market. And then finally, point E shows massive anticipation and then disappointment after the earnings were released. The point of all of this is to show that the market moves a bit like the tide coming in and going out, anticipating what earnings are going to be and then reacting to what earnings actually are. It's a dance that keeps going on, and it's worth being aware where the price is in that dance. If you just buy without taking into account where the market tide is, you can get caught in the backwash. I must now emphasize that there is no perfect time to buy. You will always be too early or too late. The most important thing is to be able to afford watching the price going down, because it will. It's very easy to get caught up looking at the charts and strong points of price support and resistance, points where the price doesn't fall below or where a level where a price doesn't break through, and base your buying and sell decisions on that. But that is a slippery slope from well-reasoned investing into throwing the dice. That said, price levels of strong support and resistance and the market's dance anticipating earnings are very real. When you buy and sell, those must be taken into account, but it's after you have determined that a company is a worthwhile investment based on analysis of its merits as a business and looking at its financial statements, and not basing your whole buy and sell decision on a chart formation. In my experience, that is a path to sorrow, is gambling, and will send you to the poorhouse. I believe in a concentrated portfolio, holding between 5 and 9 stocks and not just holding a stock for the sake of diversification. What is diversification? It's holding a number of dissimilar assets with hopefully different return profiles that will hopefully reduce your risk. It's a noble idea, but what diversification for diversification's sake does is dilute your returns. Another thing is that my 20th best idea is unlikely to be as good as my first best idea, and most of my returns are likely to be concentrated around my few best ideas. If you feel the need to have a big portfolio of stocks, it is my opinion that you'd be better off just buying an index like the S&P 500 and doing nothing for a few years. One key part of holding a focused portfolio is that there's likely to be a lot of volatility in your returns as they develop. Unfortunately, that's just part of the game. If you want high returns, you have to accept volatility and risk. If you don't like it, don't play the game and go buy an index. That's it. Thanks for sticking with me through this course, and I hope you've learned something. As I've mentioned earlier, I will be selling a monthly subscription of the fully updated value investment model with my analysis of the undervalued stocks on GetRichSlow.net. Also, I plan to post analysis of companies on a regular basis on my YouTube channel, Python Value Investing. Depending on how things go, I also have plans for other related investment strategies and courses related to data, so check out my YouTube and other social links. Once again, thanks for joining me on this journey, and I wish you a very profitable future. Cheers.